Hi, it's Terry Ryder from Hotspotting, and this is our weekly feature, Hotspot of the Week. Now here's a question. How many times since we started doing these weekly broadcasts called Hotspot of the Week have we featured a location in the Sydney market? And the answer is 0. Because these broadcasts started in May 2018, just over a year ago, and in that time the Sydney market's been trending down, we haven't actually been able to put our hand on our hearts and honestly recommend that people buy anywhere in the Sydney market with an expectation of getting growth anytime in the near future. But so much has changed, particularly in the last 3 months. We've seen a considerable turnaround, firstly in sentiment, then in confidence, and then in activity, and now we're actually seeing some tangible evidence that the Sydney market, well, parts of it at least, are starting to rise again. We've seen a steady increase week by week in auction clearance rates as one barometer, not always an accurate one, but that's been supported also by evidence that the previous general decline in prices, not everywhere in Sydney, but the general trend has been downwards. Firstly, that was that the rate of decline in prices in Sydney slowed, then it stopped. Then in the last, say, 2 months, the data from various research sources is suggesting that prices are starting to nudge upwards again. So against that background, we have this week published our latest edition of Top 5 Sydney Hotspots report. Now, this report was actually due to be updated and republished about 3 months ago, and we delayed because at that time there was just so much uncertainty in property markets generally, particularly in Sydney. In the lead up to the federal election, there was an enormous amount of uncertainty. Nobody was making big spending decisions. The Sydney market had been trending downwards, and there was very, very hard to be able to nominate anywhere in Sydney as a market that people could realistically describe as a growth market. A lot has changed in the last 3 months. The federal election's out of the way, and you know the rest of the story. We've talked about it quite a bit, the APRA changes, the interest rate reductions, the tax cuts, a series of fortunate events. And as a consequence of that, we've seen the Sydney market, generally speaking, bottoming out. Everyone seems to agree with that. The data does tend to support the notion that the bottom has been reached and the market's now moving into recovery. So against that background, this week, today in fact, we published the new edition of Top 5 Sydney Hotspots. There's a number of good locations. The locations that we nominate in this report are a mixture of markets that towards the upper end of the market, which have proven to be the most resilient part of the Sydney market against the downturn trend, and also some locations which we think have got good long-term future prospects because of their proximity to very major infrastructure projects that are happening across the Sydney metropolitan area, particularly in transport and infrastructure. But tonight, and for the first time since I started these weekly broadcasts in May 2018, I'm going to focus on a location in Sydney, and it's the Northern Beaches local government area. Now, this is a market where a lot of people say, well, what are you telling us about that? We can't afford to buy there. Well, certainly most people would find it difficult to afford houses in many of the suburbs in the Northern Beaches local government area. But in actual fact, the most popular market for buyers of all sorts, and also the best performing market in terms of resistance to the downturn, price performance during the downturn, has actually been the apartment market, and things are a little bit more affordable there. I mean, the median dwelling price in Sydney is over 800,000 right now. And that's the dwelling price, not houses. All dwellings, the median price for all dwellings, including apartments, is over 800,000, and several of the apartment markets in suburbs in the Northern Beaches area have pricing lower than that, not much lower, but the most popular market in the Northern Beaches is actually the DY apartment market. in terms of sales volumes, by far the most popular market, highest turnover by far, and it's been a pretty solid market in terms of resistance to the past 2 years of downturn. Median prices dropped a little, but not much. Long-term growth rates very good, vacancy rates very low, and rental yields by Sydney standards pretty good. But I'll get to that in a bit more detail in a little while. Firstly, just the background. One of the reasons why we've included this precinct in our new edition of Top 5 Sydney Hotspots is that it has been the most resilient sector of the Sydney market over the past 1 to 2 years. It's been the sector of the market that's been most resistant. When we recently did our latest survey of sales activity and price data for the Price Predictor Index, what stood out was that Northern Beaches was the strongest precinct in Sydney. It had been resistant to price decline. There were a couple of locations, a couple of suburbs in the Northern Beaches areas where sales activity at the moment is trending up. There's only 4 locations in all of Sydney where we can say that, and 2 of them are on the Northern Beaches area. Those are the suburbs of Freshwater and Frenchs Forest. Prices have held up pretty well. There are other markets there, while not having that trend of upward sales, because that's very rare in Sydney in the last 12 months, but a number of markets have been very consistent with their sales, or being quite solid plateau markets where sales levels have dropped below the peak, but have been maintained at pretty solid levels. So this has been a market that has held up quite well, and it really stands out right across the very big city of Sydney as the one that's done the best over the past 2 years of downturn. It's got some significant infrastructure that's helping that market. The new $600 million Northern Beaches Hospital is one of them. $500 million is being spent on general road upgrades in the area. We've also got the proposed Beaches Link Tunnel as a project that's likely to happen soon, also going to provide boost to that market. It's noticeable in particular the apartment market in the Northern Beaches precinct has held up particularly well. In fact, the decline of some of the suburbs, some of the apartment markets, the suburbs with significant apartment markets have actually got median prices higher than a year ago. Most have had some decline, but very minor decline, particularly compared to what's happened in the housing market. So the reasons to really like this area, if it's been that good in the downturn, as the recovery gets underway and markets start to rise again, this is one that's probably going to perform pretty bloody well. So Northern Beaches local government area, it was actually formed just a couple of years ago through the amalgamation of 3 local government areas, including Manly and Warringah, and the third one was Pittwater, to create the 3rd largest local government area in Sydney by population. Apart from all its wonderful beaches, it's got lots of amenity. Health services are particularly good. Public hospitals in Manly and Mona Vale, and the new one at Frenchs Forest. A couple of private hospitals, 3 of them in fact, as well. You've got the beachside lifestyle and arts and creative industries reputation there as well. Lots of galleries and markets and theatres. So a pretty good lifestyle if you can afford it. Now, as I noted at the beginning, this has been the strongest Sydney precinct, shown stubborn consistency of sales, as we say in our report on the Northern Beaches. You can go to the Hotspotting website and get this report individually, or you can get the Top 5 Sydney Hotspots report, which contains this report. But what we say is this is the strongest Sydney precinct. The strongest ones are those that have displayed stubborn consistency of sales activity in the face of the downturn, and Northern Beaches LGA has done that better than anywhere else. One of the 2 suburbs in this precinct where sales activity is actually trending higher, which is very unusual in Sydney at the moment, is Freshwater, which we describe as a high demand suburb with a village feel, friendly, family friendly atmosphere, a gorgeous beach. Property is very highly sought after. Attracts a lot of rental demand. There's a high percentage of the properties in this suburb that are occupied by renters rather than owner-occupiers. And the vacancy rate is pretty low, around 2%, much lower. Sydney is the only capital city in Australia with a vacancy rate above 3%. It's around 3.5% overall at the moment, but many of the suburbs in the northern beaches are much lower, and Freshwater is about 2%. Now, the other market that stands out for us is the apartment market in DY. Now, as I mentioned a little bit earlier, in terms of the number of sales, this is by far the most popular market anywhere in the northern beaches. More apartments are sold than houses in this precinct, the northern beaches precinct, and the most popular by a long way, by a big margin, is DY. 566 apartment sales in the last 12 months. The next best is Manly with 281, and then you've got Collaroy at 119. So hugely popular. One of the reasons, I guess, apart from the fact that it's got let's have a look at the background. It's a suburb that's favoured by renters. Nearly half of households are renting. Very young demographic, very cosmopolitan. Units dominate the market. More units in this market than houses. The median unit price is 765,000. So by Sydney, that median price for apartments, by the way, is about half the median price for houses in the area. And it's got one of the lowest vacancy rates anywhere in this precinct, currently 1.4%. So by Sydney standards, that's particularly low. By any standards, really, 1.5% is a low vacancy rate, a tight rental market, very popular rental market. So one of the reasons why we think it's a good one to consider. So 566 sales of apartments in the last 12 months at a median price of about 565,000. Median prices dropped, but not much in the last 12 months. And the long-term growth average, that's the average over 10 years, is 7% per year capital growth. And typical yields a fraction under 4%, which by Sydney standards is pretty good. Okay, so generally speaking, the apartment market, the pricing levels are held up pretty well. There's a few that's dropped a bit, but most of the, there's quite a number of suburbs that have significant apartment markets in the northern beaches area. Newport's actually had minor rise. Most of them have fallen a little bit. Queenscliff is down 1%. Manly's down just 4%. Several others sort of down, 3, 4, 5% in the past 12 months, which compared to the average drop across the Sydney market is very low. And their long-term growth averages, some of them are averaging 8 and 9% per year over the last 10 years in terms of growth in median prices on average, and pretty good rental yields by Sydney standards. Vacancy rates, many of the postcodes have vacancies well under 3%. There's a few that's much higher. Avalon Beach is high, Seaforth is high, but generally vacancies in the most popular areas, particularly DY and Manly, are quite low, particularly by current Sydney standards. So yeah, a market that's very, very popular for all sorts of reasons, and it's one that's been particularly solid in the face of the Sydney downturn, and we just think that's going to go very well as the market recovers, with the impact of the new Northern Beaches Hospital, the fact that there is a Northern Beaches precinct structure plan where there's going to be rezoning of property to allow greater density. There's a lot being spent on transport infrastructure, the road system around there, and we've got the Beaches Link Tunnel, which will cross under Middle Harbour, improve connectivity for a number of suburbs in this area still to happen. The New South Wales government has allocated over 700 million towards that project over this financial year and the next financial year, and it's a generally we're talking about a priority plan precinct. So plenty happening to support our contentions. This area is going to continue to be one that's going to attract solid demand, and it's going to show some growth as we go forward with the Sydney market recovery underway. And just to reinforce that, out today, the latest figures from SQM Research, their weekly asking prices index. It shows that the asking prices index for Sydney for houses over the past month it's up 3.2%, which is a pretty big change in just 1 month. Units is pretty much hasn't changed according to this. In annual terms, Sydney pricing, generally speaking, according to this measure, still down, but not nearly as much as it was according to Eskim Research. Sydney house prices overall down 5% in annual terms. Not so long ago, it was around 10%. So the rate of decline is dropping in annual terms as the short-term situation improves. And in terms of units, down 3.5%. Not much changed in the last month. There's quite encouraging figures in this index for a number of cities across Australia. Melbourne is improving, Brisbane's improving according to these figures. Adelaide's doing okay. Canberra's improving a lot according to these figures. This out today from SQM Research and the pricing in Canberra. Darwin is actually starting to get back in the black for the first time in about 5 years. Again, according to these figures. Hobart's still up in annual terms. And nationally, in the past month, we've seen prices up about 0.5% for the past month. And for the capital cities, a rise of 1.4% in the past month, according to Eskim Research. So much better news, generally speaking, on pricing. And they also publish a weekly rents index, and that's been a lot more positive than prices across the capital cities and nationally for some time, but very, very strong or solid rental figures from most capital cities. Sydney's down a bit, but Melbourne's up, Brisbane is up, Perth, Adelaide, Hobart's up a lot, and nationally there's increases. The national average is increases. Darwin is down a little bit, and Sydney's down a bit as well. But most of the capital cities, according to these figures, have growing rentals, and that's always a good sign for the health of property markets generally. Okay, so that's Hotspot of the Week for this week. We're focused on the Northern Beaches area of Sydney. For the first time since we started these Hotspot of the Week broadcasts about 15 months ago, in recognition of the fact that the Sydney market is actually moving into recovery and showing signs of a return to growth. So if you'd like to find out more about the Northern Beaches, you can find our report on that location on the Hotspotting website, or you can get the new Top 5 Sydney Hotspots report also from hotspotting.com.au. That's it for now. We'll do it again same time next week, and there'll be other broadcasts later in the week on other topics. That's it for now. Let's do it again soon.